Do you want to know the differences between income and profit? Well, you've come to the right place. The terms profit and income are used differently by many people. For some, income means the money coming in, while for others, it represents the total value of earnings received over a specific period, whether in cash or in kind. Whether you are a business owner or a corporate worker, it is important to know the differences between profit and income. This will help you run a successful business and manage your expenses. Not knowing these two types of monetary gain that affect an organization in different ways. To begin with, let's briefly define each term. Income is the total money generated from sales. That is to say, it is the company's overall profitability and accounts for all money that flows out of and into a company over a set period of time. Note that there are two primary types of income in the business world. These types include unearned income, which comes from investments and other types of monetary gains that are not related to production or employment. For example, stock, savings accounts, retirement funds, and bond interest. We also have earned income, which is gained through actual work. For example, bonuses, salaries, wages, and net earnings are all considered earned income. Profit, on the other hand, is any revenue left over after expenses are accounted for. It is the difference between how much money is earned and how much is spent on operating or producing something at the end of a set period. There are also two types of profit, gross and net profit. Gross profit refers to how much a company has left over after subtracting the cost of goods sold. It does not take into account other business expenses such as operating costs, rent, and salary. Meanwhile, net profit is how much money is left over after all business expenses have been subtracted from the total revenue. This type of profit shows exactly how much a company has earned after depreciation, taxes, interest, and operating expenses have been accounted for. So what are the key differences between these two business terms? Number 1. Focus. Income measures volume, size of business. For example, two retail businesses operate in the same market. Business A records an annual income, revenue, of $2 million. Business B records an annual income of $20 million. From this, we can infer that Business B has a larger volume of operations. It likely sells more goods, serves more customers, or operates on a wider scale. Therefore, income, revenue, is used as a proxy for business size, because higher income generally indicates a higher level of business activity. Meanwhile, profit measures efficiency and profitability. For instance, two businesses generate the same income but incur different costs. Business A income is $1 million, expenses, $900,000, profit, $100,000. Business B income is $1 million, expenses, $600,000, profit, $400,000. Even though both businesses earn the same income, Business B is more efficient and more profitable because it controls costs better. It retains a larger portion of its income as profit. Therefore, profit measures efficiency and profitability, since higher profit, relative to income, shows better cost management and more effective use of resources. Number 2. Formula. The basic formula for income in business is income equals revenue. That is total sales, returns, allowances. Then in simple contexts, it is written as income equals quantity of goods sold multiplied by price per unit. For example, if a business sells 100 items at $2,000 each, income equals 100 times 2,000 equals $200,000. Meanwhile, the basic formula for profit is profit equals total revenue, income, total expenses. For instance, revenue, $500,000, expenses, $350,000. The profit equals $500,000 minus $350,000 equals $150,000. To end our discussion, income is the total money a business earns from its sales or services, showing the size or volume of operations. Profit, on the other hand, is the amount remaining after all expenses are deducted, showing the efficiency and actual financial performance of the business. If you like this video, click the like button, comment, and share. You can also subscribe or follow this page for more updates.